Investors are often confused between crowdfunding and equity crowdfunding. These are two totally different things, and today I'm bringing clarity to it all. Hey there, my name is Chris Graby. I've invested in 25 plus startups, and they're valued currently at around $750 million. And I love to help everyday investors understand how they can become startup investors as well. Now, by the time this video is over, you're gonna be the smartest person in the room when it comes to the world of startup investing. So let's take a second and talk about some of the things we're gonna be covering in our video together today. I'm gonna be sharing with you how recent laws have changed that made it possible for anyone to invest in startups, sometimes for as little as a couple $100s, which I think is really neat. I'm going to finally, once and for all, bring clarity to the difference, like I said, between crowdfunding and equity crowdfunding. I'm also going to show you where to find these startups, like where are they posted? How do you find them on the internet? How many are there out there right now? And lastly, we're going to talk about how you can start investing in startups today and even invest right alongside of me. So if you haven't yet, hit that subscribe button and let's dive in. All right, look, first we have to talk about the brand new piece of legislation that made this all possible called the Jobs Act. Now, it started back in 2012 when President Barack Obama signed this law into act in the Rose Garden at the White House. Now, the heart behind this bill was to help bring startup investing to everyday investors, something that really hadn't been possible since the Great Depression, which is mind-blowing if you think about it. Now, after signing the Jobs Act, it took 4 years to get everything in order, the government. And then boom, 2016, equity crowdfunding hit the scene. It launched for the very first time in history. This really was a monumental day for investors, all types of investors, but specifically those who were non-accredited investors, meaning they weren't super uber wealthy and never had a chance to invest in startups like Airbnb and Dropbox and the Ubers of the world. Now, as you can imagine, with any new seismic shift like this, things started off pretty slow. And then 2020 happened. Everyone was online, marketing was easier, and there were a lot of eyeballs on this brand new world. Investors started to really see equity crowdfunding as a new way to diversify their portfolio. And then startups started to notice, hey, there's a whole new option out there for funding. And they started to notice that everyday investors were funding ventures like theirs. So at the time, some of these startups raised all the way up to $1 million, which was the limit at that time. And then in 2021, the Trump administration came in and did something really big. The laws were revamped, making it possible for a startup to go from raising just over $1 million all the way to $5 million. Now, this kicked the door wide open. See, startups that wouldn't normally get out of bed for just $1 million are now raising up to $5 million. Now, that meant that even stronger startups that maybe would have never donned the door of this before, those that were established would consider this as a real option to raise money. I want you to take a second to think about this. Companies and startups that maybe had a huge customer base or really big email lists, well, they now were possible to open the doors and let their customers become their shareholders, which is huge, right? Think about some of the companies that you love. Think about if you could be an investor in them while they're still a private company. The way I see it, that is a game changer. So, what is the difference between crowdfunding and equity crowdfunding? Well, it's actually very simple. So let's talk about crowdfunding for a second. This is anyone where a creator wants to start a business. They have an idea, a widget, or maybe a gadget they're trying to build, right? They will then turn and post their item or their idea or their product on one of these sites like Kickstarter, basically taking pre-orders. When you buy there, right there with them, you kind of pledge to say, I'm in, and maybe you get a perk, like a meetup or t-shirt, a coffee mug, something like that. But that's really all you get. And you get the product if they ever make it and actually ship it to you. With equity crowdfunding, it's exactly what it sounds like. There is a founder or a founding team who has started a business, and they aren't trying to sell you a product, they're trying to get you to invest in the company. Hence the term equity crowdfunding, because when you invest, you more than likely get a piece of equity of the company. Let's be clear here. There are various ways that you can invest in a startup. You can get equity right away and own shares in the company. Sometimes that'll be called a priced round. Sometimes it's a convertible note, right? Meaning it's a debt that could eventually convert into equity sometime down the line. And then other times, if you're looking at some of these sites, you might have seen the term Safe Note. Well, that stands for Simple Agreement for Future Equity. It's another form of investing. Typically, this sways a little bit more towards the founder and gives them some more time to kind of get their ducks in a row, but you're investing for some kind of future equity down the line. Now, let's recap. Crowdfunding, you're paying for a product. You don't own a piece of the company. Equity crowdfunding, you're investing in the startup in hopes that one day you will see a return on that investment. Let's take a second and dive into some of the funding portals that are out there where you can place these investments in these startups right now. Now, the thing you have to know, there are a number of places that you can go to look at, review, and find startups today, but I'm going to share some of the most popular websites out there right now so you can get started today. The first one I want to talk about is WeFunder. They currently hold the largest market share in this space. And a fun fact that most people don't know, they are a B Corp. Means that they are committed to doing good as well as making money. Their philosophy and their thesis is they want to open up the doors for any founder and any investor who wants to come in and be a part of this process. So they don't have a ton of criteria and big hoops that you have to jump through before you start raising money on these platforms. The next one I want to talk about is Start Engine. Now, Start Engine is another big one out there, and they've had big names that are a part of what they're doing. Kevin O'Leary, one of the sharks from Shark Tank, is one of their advisors, and he endorses the portal and the platform, and sometimes he actually even invests in some of the deals on that platform. And you might have seen his ads out there. They're everywhere, but they're a little bit more strict on their rules. With them, you have to be a little bit further down the road than just an idea, and sometimes you have to be in revenue, already making money to list on their portal, which is very similar to another big portal out there called Republic. Republic's interesting because they have some rules and regulations as well, but they're not as loose as WeFunder. They're kind of right in between Start Engine and WeFunder. Their leadership team has to vote and decide on every single company that raises on Republic, which I actually really appreciate because that means they're doing their due diligence and not just putting any company out there. But they're still allowing some pretty early stage companies to raise on their portal and platform, as well as some very mature companies that are already down the road. Now, the last portal that I'm going to be covering here today is one called Equifund. Now, Equifund has a very different approach to the world of equity crowdfunding investing than these other platforms that I'm talking about. With Equifund, they post a very few deals every single year on their portal. They're actually very selective to the kind of startups that they put on their platform. You may see in a given year, maybe they do 4, 5, maybe 6 deals, where WeFunder will do hundreds in a given year, maybe even thousands depending on the number of startups that want to raise on their portal and platform. And again, every portal's different. You're gonna find the one that works best for you, and there's great deals on all of them. So there you have it. That's the high-level overview on some of the bigger portals and platforms inside the world of equity crowdfunding. Now, one more important thing to note about the different portals. Each portal has their own criteria, like I mentioned, when it comes to doing due diligence. But as an investor, it's so important not to leave your own personal investing due diligence up to anyone else. You always have to make sure that you do your own homework and you do your own due diligence before investing. One important red flag that I want to make sure you hear me say, it is so important that you and I remember as investors in these companies that are raising on the WeFunders, the Start Engines, and the Republics, and all of the other portals out there. There's tons that I haven't even mentioned yet. The people building the investing pages, the campaign pages that they're called, these are usually the companies themselves. So what does that mean? Well, it means that they're shooting their own videos. They're telling their own story. They're creating the pitch deck and all of the information that you're going to be seeing that they're telling you so that you could potentially invest. So basically, they're in charge of telling their own story, which is something you kind of have to make sure you're aware of when you're looking at these sites, right? Everyone's gonna put their best foot forward, but this does not mean that these are necessarily bad stories or that these startups are telling you some sort of lies. But the thing you have to realize is that what are they gonna do? They're gonna frame this narrative and say it in the best way possible and favorable for them to make investors get excited about wanting to be a part of it. And that's not bad, right? But you have to do your diligence, like I said. Now, the good news is sometimes these portals, most of these portals will do some sort of review on the campaign page to make sure the information lines up and ultimately at the end of the day that they are compliant. Because look, the SEC is involved and that's a really good thing. We want everyone having eyes on it so that when the investor jumps in, they know what they're looking at. Look, I've seen thousands of campaign pages and some that look very compelling and tell an unbelievable story. But when I dove into the numbers and I pulled back the curtain, behind it was just a really good marketer and not a great company at all. So just make sure you do your diligence and do your homework. It's just so important that you can feel confident before you make an investment. All right, now one of the biggest questions I get asked all the time is, Chris, who can invest in these startups? Well, the answer is simple. Anyone. Well, anyone that's over the age of 18 can invest in these startups using equity crowdfunding. Now, it doesn't matter how much money you make, right? Which I think is super cool, especially with the new law changes. Now, I need to say this, there are a couple provinces in Canada that basically don't allow their residents to invest, but most of the US and most parts of the world can actually use this vehicle and jump into the world of equity crowdfunding. The best way to find out if you're eligible to do this, go to one of those sites that I mentioned, go try and place an investment, put your name in, just walk through the street. You're not gonna get to all the way to the end. Just put your information in and boom, the portal's gonna tell you if there's something with your province or your country or wherever you are that you can or cannot invest in that startup. So that's an easy way to find out if the laws apply to you where you live. All right, let's dive into the world of accredited versus non-accredited investors. Now, I mentioned non-accredited investors earlier. Let's dive into what this means. First, let's talk about what it means to be an accredited investor. There's some certain stipulations and numbers that the government puts in place here in the United States to deem someone an accredited investor. Now, like I said earlier, before these laws were enacted, accredited investors were the only ones that could actually invest in early stage startups. So let's take a second and break down the actual numbers that make you qualify to be an accredited investor. Now, your annual income by yourself has to be $200,000. Now, joined with a spouse can be up to $300,000 a year, right? Now, this has to happen over a 2-year span that you make that same amount of money or higher. Now, another qualification of accredited status is you have to have a net worth over $1 million. Now, this can either be individually or jointly with your spouse if you're married. Now, here's the thing you got to realize. This does not include your primary residence. I think that trips a lot of people up sometimes. Also, another way, this actually just happened with the law changes in 2021. If you have active certificates with like a Series 7, Series 65, or Series 82 license, you can also be considered an accredited investor as well, even if you don't hit the income thresholds or the $1 million net worth threshold, right? So that is what makes you an accredited investor. But let's take a second and talk about who is declared a non-accredited investor. Basically, if you don't qualify to be an accredited investor, well, you're classified as a non-accredited investor. Pretty easy, right? Now, if that's you, that's not a bad thing. It's just all how the law shakes out. And one thing that you need to know is that there are limits or amounts that you can actually invest per calendar year based on your specific income and your net worth. So if you're an accredited investor, you can invest as much as you want. The government clearly thinks you have plenty of money and you're a responsible adult and you can invest all you want. Now, if you're a non-accredited investor, like I said, it's based on your annual income. So before you place an investment on any of these portals I talked about, WeFunder, Start Engine Republic, all of them, they're gonna ask you a few qualifying questions. And this is gonna determine the amount that you're allowed to invest over a calendar year. It always resets at the first of the year. Now, this is something really important that you need to know. No one is going to verify this information. It's really on you to know and report your own personal financial situation. So if you show up to Republic or Start Engine, no one's gonna say, hey, can you prove to us that your net worth is this much and you make this much money? No one's gonna ask you that question. It's basically one of the biggest honor systems I've seen in my life, or at least while I record this right now, it's the case. Now, nobody knows your financial situation better than you. Maybe you go and you sign up and your net worth is not over $1 million, right? But then something happens. Maybe you go and you make more than that. Maybe you make $300,000 annually with your spouse. You have a great year. And you want to go back to that portal and platform and you can change your information. You can change your status any day. If something changes, you can say, hey, now my net worth is more than $1 million, or I make more money, and you can be deemed an accredited investor and the limits will be taken off for you. Maybe you sold the business and had a big return of money and now your accredited status have changed. No matter what happens, you can go back to that portal, no matter what happens, and you can insert your new information and you can get that accredited status. Now, the last thing that I want to cover is how much can you invest in a startup? One of the biggest questions I often get asked. Typically what happens is when you show up and you find a startup that you want to invest in, usually the lowest amount a founder is willing to take in, and that even a portal allows, is around $100. I've seen startups that have set the limits at $1,000 or $2,000 or $500. It's kind of all depends on what the founder and the founding team decides and what they think the audience will invest into their startup. So let me just say this, investing $100 into any startup is not a bad thing. It's a great way to start learning this space and get a feel how it works. But as a long-term strategy, investing $100 here and $100 there, I wouldn't call that a really great strategy to see life-changing returns. But I do think it's great for like a crawl, walk, run approach in the very beginning and a way for you to get comfortable with the sector. Also, another great way to learn about a startup and the space is ask the startup questions about their company and their mission on their campaign page. This is one of my favorite things about the world of equity crowdfunding. You get direct access to these founders. And this is a great way to see if they handle investor questions like with respect and humbly. And that means if they're gonna do that, then they're more than likely gonna handle your capital and investment well. So it's always something I look at. Now, look, I hope this has been helpful for you. As you can see, I love this new world of investing, and I think it's gonna be another route for everyday investors to build generational wealth. But I also wanna say this, it's extremely risky. You gotta know this. It's early, and it's a very risky stage. Startup investing is risky. Now, investing in early stage startups is probably one of the riskiest places you could actually park your money. And it's important for me to make sure you hear that. So do yourself a favor when you go look at these different portals and platforms. Please make sure that you do your research, you do your homework, because I wanna make sure that you feel confident before you step into any startup deal or any investment that you jump into. Deal? Okay, deal. All right, before we go, if you have not yet heard about the exciting new newsletter that I just started called Chris's Watch List, man, you are missing out. Every single week, I'm sharing the startups that I've got my eye on right now in your inbox every single week. At any given time, there could be hundreds of startups out there, and I dial it down to a select few that have my attention. It's completely and totally free, so all you have to do is hit that link down below, come join my watch list, and I'm gonna send you the hottest startups that I'm watching right now. Thanks so much for joining here. If you like this video, I know you're gonna love this one right here, and you're gonna definitely love this one right here.